All right, everyone. Thank you for your patience and once again, a warm welcome to our webinar. Today, we will discuss about the topic on buy now, pay later. So the question is buy now, pay later customers' wildest dream or worst nightmare? Today, customers can buy all that they want and desire and pay in interest-free installments, all without the hassle of applying for credit cards or dealing with troublesome processes. FinTech has made this happen. However, with growing concerns around rising debts and enabling shopaholics, is buy now, pay later customers' wildest dreams or worst nightmare coming true? Join us today on our first Fireside chat in Singapore with Mr. Michele Tucci, Chief Product Officer of Credolab, and our guest speaker of today, Mr. Arvin Singh, co-founder and COO at hoolah, as they debunk the myths of BNPL to empower customers with sustainable spending habits. Without further ado, allow me to hand the time now to Michele. Michele, please.
Thank you, Carson. Hello, everybody. Hello, Arvin. Thank you for joining us today. We want to explore how buy now, pay later is making inroads into Southeast Asia. Today, you are present in 3 markets. I'm sure you are already planning to grow into further markets. But before we go into that, can you give us a little bit of background about yourself and what led you and Stuart to launch hoolah in the region?
Thanks for having me, and happy to share a little bit of background, both on myself and of course on hoolah. Just quickly to introduce myself, I've been in Singapore for about 8 years now. I've spent probably the last 10 years in and around payments in some way, shape, or form, whether it's on the merchant side doing co-brand cards, or on payment gateway side at WorldPay, and most recently prior to hoolah at Visa, in a regional role more on card issuance. I've kind of played some sort of role in different parts of the payments journey prior to getting hoolah started. Prior to that, I was in the Canadian market. I am Canadian, and my background is in the telco industry. I spent the first part of my career there before shifting over to payments. In terms of hoolah, it's always fun to look back at the origins and how we brought this to life, and what really was the problem that we were trying to solve. So if I rewind back, Stuart and I used to work together actually at WorldPay, and we'd spent some time with Startup Bootcamp and around some of the great fintechs and other companies that were starting up in Singapore, and spending a lot of time with retailers, merchants as well. We started to hear, and this is where Stuart approached me and saying, listen, there is a challenge. Like, the merchants are articulating that there is a real challenge. They're seeing this massive drop-off in cart abandonment or checkout flow abandonment, wherever you want to look at the churn of shoppers, whether it's in a physical retail store or on the e-commerce side. It was a real problem. And they had really been looking at payments companies as well as other tech platforms to provide solutions. But it's hard, or it was difficult for them to find something to solve the problem that didn't also lead to a massive impact to their bottom line. So the default option is to discount, like provide a 20% discount and try to get the customer through the funnel as much as I can, because that's the only way I can close, or that's kind of where the consumer mindset was. I think at the same time, we had noticed companies like Klarna and Afterpay were really growing rapidly and offering solutions to these challenges, but in other parts of the world. And we noted that there was going to be this massive gap across Asia. And our goal was to bring buy now, pay later to the Asia ecosystem to help merchants overcome some of these challenges and build a sustainable, omni-channel solution for these merchants as well. Of course, the value proposition has evolved over the years, but that was the starting point, was really to help them drive that conversion position.
So it's interesting that starting point was almost to create a new payment option, not really a new lending kind of proposition. And in a region where credit cards, penetration is quite low, perhaps not Singapore or not Hong Kong, but around Southeast Asia, credit cards can be as low as probably 8, maybe 10%. Indonesia, I'm thinking. So cart abandonment was also due to this lack of payment method. There is perhaps also cash on delivery, still very prominent in the region, which could be a competitor to a payment option or a checkout option like BNPL. How do you address a checkout kind of competition?
I think it just comes down to the inherent value that you can offer to a consumer. Now, I would say more broadly, digital payments and digital payment options in the region are really important if we're going to move forward in call it Southeast Asia or Asia in general with respect to more digital payments and working away from things like cash on delivery, which inherently has a lot of cost, complexity, and a lot of impact to the retailer, because there's many times you show up to the delivery point to deliver the product, and there isn't enough cash in the household to actually complete the cost position on that cash on delivery. So the transaction terminates, but you've now paid for a delivery person in the last mile to get to that household to ship that product, and the transaction is essentially terminated. So it's not really a true conversion until the point of delivery, which is quite dangerous when your major pain point is conversion rates. So it's still a massive challenge to conversion for retailers, but they had to do this and rely and continue to rely on COD because of a preference of that offline payment. So I think overall, digital payments is a massive opportunity in the region, and we're part of that story of the digital shift in this part of the world, which is great to be a part of, because I think there's a lot of white space there still to erode cash, like just as a payment method to compete against cash rather than other digital payment methods. So there is definitely enough room to build a business around that position. But there's also just the general value proposition of what we bring to consumers in terms of the affordability factor, the transparency factor, all of those other things that make us unique, generally make it difficult to do what we do, but also makes it a unique value proposition that helps us also distinguish ourselves from other payment methods or other digital options. We solve a very specific problem, and it's the expectation isn't that we are going to be the 80% of digital payments. I think we're probably going to be the 20% in that realm. But it's also knowing like the proportion of the population that's going to address a problem for.
Yeah, and I mean, you operate in a classic two-side kind of demand ecosystem. You have merchants on one side, you have consumers on the other side, and like with any digital innovation, education is a big component of driving demand, but also, I mean, driving demand on both sides, right? So Visa, MasterCard, they do strike a balance, or at least they try, between issuance and acceptance. How do you drive this education across the two sides of your ecosystem, of which you are a middle component, so to speak?
This is probably the most difficult thing around running a two-sided platform, is you need to create supply and demand at the same time. We were lucky in the early days to have the trust of a few retailers, largely startups that had gone through the path that we were going through at that time. Companies like HipVan and Kasari, Singapore, kind of born startups that were, bringing a digital approach to traditional furniture retail. They recognized what we were trying to do very quickly and said, okay, I get it. I understand what stage of the journey you guys are in. And it actually reminds me of a conversation actually with Kasari, and basically they're saying, we're going to support you as one startup to another. We're going to get on board and help you get started, because that's what you need as a business. And it was so massively important for us to have somebody take that position. And one, I think they understood the value proposition, but two, they were paying it forward. They understand that in a startup in the situation we were in needed that support from other startups. So we actually found a really strong ecosystem of support on the merchant side from a lot of the tech-driven, startup-driven kind of, the Shopify events. And those were the places where we started to get traction. And then we turned that into some larger retailers that we ended up working with. It wasn't in the first 6 months that we would be able to sign a Nike, for example. That took years to get to that point where we can go to somebody like that and show the value proposition and the traction that we've had. But we were very, very lucky to have some great connections, and having worked in payments and e-commerce payments before, thankfully we had some connections on the merchant side from that past life.
Yeah, for any new venture, initially you get support from family, friends, and fools. You need those as well. Someone who believes in the product, somebody who understands what problem you're trying to solve, and wants to join you on that path as well. We did have our own share of fools initially with Credolab, so perfectly understood. But when a product becomes so sexy, like a BNPL, no upfront cost, no interest charges, no fees for the consumer, then it raises also some eyebrows, or maybe the regulator may start scrutinizing exactly how this works. At the end of the day, it is an old EMI, equal monthly installment kind of product, repackaged and with a different business model behind and revenue model. So the key question of our webinar is whether this is good for consumers or not. How do you strike that balance between building a profitable business and encouraging sustainable spending? Right.
So this is the great thing about that nuanced difference of the business model, is that we're incentivized when our users pay on time. And I think that's probably the biggest distinction with a traditional EMI or an installment plan, is that the majority of that revenue from a traditional provider is driven when people do the wrong thing, when they pay late, or they miss a transaction accidentally even. The majority of that accidental position for us of missing a payment, it doesn't even exist, because there's a grace period, there's continuous communication. We don't want people paying late. It costs us actually when people pay late. So any late payment charge that we have, which again, we kind of put a link on the home page of hoolah.co, so you can go click on it and see the late payment charges as well. Like, that's the level of transparency I think that's important. But more so, the motivation is different. We don't want people to pay on time. And because our incentives are more in line with the consumer's incentive, which is, I want to get the product, I want to pay the exact price as I would if I paid otherwise, and I'd like to have no hidden costs associated with this, we are incentivized to deliver exactly that, so that they do pay on time. Now, we're also incentivized, and I think, one is a distinction of how is BNPL different from a traditional installment plan, which I think is what I was sharing earlier. The second is, how is hoolah different from other buy now, pay later providers in terms of our approach to this, and how do we create mechanics or use technology to actually drive more responsible spending, or as we like to call it, responsible affordability. So when we set out in the business, we said, what is our philosophy? What is our soul? What is the soul of the business? What is our vision? And a lot of that came back to this term of responsible affordability. It's a mouthful. It's not the sexiest statement, but it means a lot to us in terms of the business and the people in the business, that this is our approach. We are actually going to take steps to proactively stop people from overextending themselves. So we will actually come in at a certain point and say, hey, you've got a few orders already made. We'd like you to repay them. Now, this is actually still good for business for us. Even though we're essentially saying no to revenue today, we're building a long-term relationship with a customer that's saying, we want to be trusted by you to help you drive better financial decisions. We want you to use our system in the right way to not overextend yourself. And we are going to come in and step in at certain points to encourage you to do so, and to pay on time, and to do all of these other good things that go along with good behavior. Education is a big part of that, and I think we've got an obligation to educate consumers properly around this. but we also need to use technology to take a proactive step. It can't just be, we're a responsible company. We trust you to be responsible. We actually inject ourselves and say, we think you're bordering on that position now of overextending yourself. We want you to pay off the old orders first, and then you can continue enjoying hoolah. Communicating that is really delicate. Like getting that message across without pissing off somebody is a tough thing, but it is the balance that we need to strike for the business if we're going to really be true to our vision.
Yeah, you may end up having customers saying, look, you're not my father, you're not my mother. Why are you telling me how to spend my money? But it is important. Affordability is a key topic in the region, especially because of lack of data. How do you compensate for this lack of data on the transactional side, on the affordability side? Especially, maybe this is a misconception or of the buy now, pay later, but especially when the target audience is skewed towards a younger kind of population. In America, I've heard that the key target is between 18 to 23. So they probably, you may argue, they don't even know how to spend money, right?
This is an interesting one. Actually, maybe this is a controversial statement. I think that folks are probably more skeptical and scrutinize new solutions a little bit more out here in our part of the world. Singapore certainly has a lot of savvy users that are digital natives, right? However, that's not really the core target segment, even as a starting point for our business, right? The bulk of our customers are slightly older than that, but it's a much broader range. And what we find is that because we built a broad set of merchants and verticals that we work within, we find that our users tend to gravitate towards the things that they would want to get for their different stages of life. And that was also part of that early stage. We said, we want to be a lifestyle business that can follow a customer's journey through their life. So Singapore has a very nuanced approach. At a certain point, within a certain age range, you might buy your first HDB flat. And you move in, and the first step is, I need to furnish my place. My HDB loan actually doesn't cover renos and furnishing. So I need a separate renovation. I need a separate furnishing position. And that's a role that we can help support. And we see that a lot of folks buying furniture on our using hoolah are within that age range of folks that are moving into their first flat in Singapore. So it's really unique to see, we're supporting somebody make a transition in their life stage. With a lot of the younger folks, for us, we tend to see a lot of job-related purchases. And then you overlay something like a COVID situation over the last 18 months, a lot of the shopping has been around optimizing a work-from-home setup, whether it's a desk or a standing desk, a better computer chair, all of the things that will make life at home a lot more pleasant, because you're now spending, 20 hours inside your home, 22 hours inside your home on a daily basis, potentially, right? So it's a little touch up on the furniture, a little upgrade here and there of certain things just to make it more comfortable. Maybe a better coffee machine because you're not going to Starbucks every day and you're making coffee at home now. So we've seen folks really make that investment into a more comfortable home life, especially over the last 18 months. So I don't know that the data in Asia, and I think we will eventually put out some reports. We are working with some folks to put something out into the market to show that the way that folks shop and use buy now, pay later, at least from a hoolah perspective in this part of the world, is significantly different from other places in globally.
Yeah, and this is interesting because it's perhaps it's a localized version of a buy now, pay later proposition, but actually it's what the users do with it. Maybe also cultural. In the US, in the UK, probably you tend to buy things that you don't need. In Asia, less so. You tend to buy things that you need, and you find the optimal way to pay for those. So it's responsible affordability. I'm going back to this idea of lack of data. I mean, as Credolab, this is the business we're in, right? The sweet spot for us is to help lenders and banks whenever there is no credit bureau data or there is not enough historical credit-related data to make a decision. And I believe you overcome that by considering different sources of data, by considering different parameters of each application. And perhaps the first application is for new users is always the most difficult to assess. How do you see your underwriting processes, without being too technical, being deployed across different markets? Do you think you have reached the point where you have enough data to make always good decisions, or there is still room for improvement?
I think so. I'll break this into two things. One is we have a decision engine, right? Something that manages both a repayment risk and a fraud position for the business. And I think on both sides, the journey is never complete. It is continuous optimization required to make sure that you're letting the right customers through and stopping the folks that are trying to take an abusive approach to your platform. We have had folks try to use hoolah for the wrong reasons or use it in the wrong way. We've interjected and stopped that nefarious behavior because of that decision engine that we've built. Is it perfect? I don't think there's ever a point of perfection. It's always going to have to evolve and optimize, because people that really want to attack a platform are going to find new and improved and different ways to do so. So we're going to have to continuously invest in that. So I think there's a technology approach that's internal to us where we invest in this decision platform. It's our IP that we've built over the last few years. We've evolved it multiple times since. It's learned. It continues to learn on every order that we make, and it's driving those decisions. Now, that product and technology that we built, it can always be supplemented by external sources. The reason that we built it internally and from a, call it hoolah proprietary data standpoint, is so that we could be flexible to launch in a new market within a couple of weeks. So we could actually, to your opening statement, we're live in the 3 markets. We're launching new markets. We plan to do so pretty efficiently. Right? We don't want to build something from scratch again for every market. So that's why we constructed our platform, that decision engine, to not be reliant on third-party data. But the interesting thing is it can still be supplemented on a market-by-market basis by external data sources. So it doesn't stop us from being better and being more localized in a specific market. So that's why it's 2 different things. One is building that IP and flexibility and scale. That's the speed that we can move with. And the other is, how do we optimize, get deep, and open our business to a broader potential set of customers while not taking on a lot of incremental risk or fraud?
Yeah, that's I believe it's a peculiar kind of approach. And it's also a question of buy versus build, which is also related to speed. And I think what I've seen now is that you have successfully launched in 3 markets, and perhaps you have grown maybe less quickly than other companies in Anglo-Saxon markets, but perhaps in a more sustainable way. And I'm curious if you can share something about your plans moving forward, maybe from a geo expansion point of view.
Yeah, absolutely. So we've got a couple of markets on the near horizon. We've been investing heavily into that expansion plan. We've got folks on the ground in a couple of markets already. So whether it's Thailand or the Philippines, we've got teams starting out and looking at and starting to consider what it takes to get those markets going. So a lot of the pre-work, this is a year in the making, right? When it comes to regulatory conversations, infrastructure, some of those things. The good thing is the tech side is pretty lean. So it's more the operational and compliance side that needs that work to make sure it's in the right place. But as soon as that stuff is done, we can actually flip on the tech side in a couple of weeks, do a bit of testing, and get it live and operational very, very quickly. So I'm pretty excited about getting into some of these new markets. And of course, one of the big pieces of value here is that we can offer our existing merchant base a broader reach as well into new markets also. So I think it's just a great opportunity for us to look at some of those markets. Those 2 specific, we are looking at North Asia as well. I think the goal for us is not to be anchored to just the ASEAN or Southeast Asia markets, but we will look at using the Hong Kong position that we have to go into the North Asia markets as well, whether it's Korea, Taiwan, Japan. getting into some of those other markets over time. But we really want to nail it with the next two in Thailand and Philippines. It's kind of really close to going live.
Yeah, I did notice that on your website you have Thai as an additional language, but I didn't know you had operations in Thailand. So there was kind of a clue on what was coming next. Yeah.
It's that local approach, right? We want to make sure that we're as local as possible, and we kind of got that going. We've got some folks that speak Thai in the business as well, which kind of helps
It does.
to get that started. Yeah.
It does, and perhaps it helps also when you talk to regulators. No, we know in the region there are some very open-minded regulations like MAS in Singapore, like the Hong Kong Monetary Authority, and there are some that are less so or more reactive than proactive. So what we found with Credolab is that when talking to the regulator, it helps to educate them as well. Now, you spoke earlier about educating customers, educating merchants on about this new solution. What about educating regulators? Is that part of your strategy, some sort of government relations also?
Definitely. I think it's always this balance of a startup, right? How do you keep the business lean while at the same time try to invest in these functions that are super critical? We made that decision a year back to start investing in this expansion plan, and part of that was to bring in someone that had the experience of working with different regulatory bodies across the region. Actually, he had spent some time setting up a bank in the region, which, as you can imagine, is a pretty big regulatory initiative. So we've always welcomed the conversations with the regulator. We actually spoke to the MES in Singapore before we even took Hoolah live years ago. It was really important for us to have that discussion and dialogue. We continue to have those conversations with the respective regulators. We do welcome some of this as well. We think that not all buy now, pay later is the same. And I think that's a really important message I want to get across, is that our approach is different from what others are doing in the market. And I feel that we need to set some standards in terms of how we approach, especially on the consumer side, and how we educate as an industry. So, I think there is an industry approach here, and we welcome that dialogue with regulators to be able to get the right education going for users as well.
Yeah, I mean, when you talk about regulators, the first example that comes to mind is what the FCA did in the UK, basically fining all of the buy now, pay later players, except for one, actually. And they found that their advertising was misleading. And that boils down to how to communicate a product that is intrinsically easy, but also maybe too good to be true. And I think I'm wondering if you have had customers in the past, maybe in the early days, that were skeptical in this way. Now they were saying, "Oh, maybe this is not real. No, it's too good to be true," right?
Oh, this is so spot on. When we launched the platform with the first, say, 4 or 5 merchants, and this is going back years now, good practice tells you when those first customers come through, find out why, understand what drove that decision. So I picked up the phone, rang a couple of these customers in the early days, and asked that question: why did you choose Hoolah? What led you down to this path? Getting it directly from the user is always the best way to understand what's working well or what's not. And the first few customers, it was really surprising to me to hear them say, "Listen, I opened a new tab. I went to your website. I researched. I looked at who the people were. I looked up your profiles on LinkedIn to see that it's a real company." Like, it was down to that level of research and detail that the early adopters had in terms of what they were doing. Because they're like, I got the value proposition. I understood that aspect of it very quickly. But I did think it was a little too good to be true. I wanted to see what was the catch. And your FAQs are quite clear. I kind of understand that there's late payment charges. I can find it. I actually dropped you guys a note. I heard this from a few folks. I dropped you a note on your live chat, and somebody was able to chat with me immediately, which made me a bit more reassured that there really is somebody I could go to and talk to if things don't work. and having that confidence helped those customers come through. They were able to get exactly what they were looking for in terms of value. Now you built that trust, credibility, and value proposition with someone. They're going to continue using your solution for years to come. So I think that those were some great insights, and we modified the website actually within a couple of weeks of going live because of that feedback that we got. We improved the FAQs. We implemented that customer support chat line. I'll be honest, I was the one responding to all of those chats. But the point was that there was somebody, like it was under an alias, but the point was somebody was there. The customers just felt a lot more comfortable having that in place.
Yeah, and I see how that approach actually paid back. Now you managed to bring that type of personal touch at scale, and it's interesting to see how you have grown. I remember when we were neighbors in the co-working space in 2018, I think, in Singapore, and see what you have done now. So I know we have reached our half-hour mark, but we have a few folks in the audience. Maybe we can open up the floor to questions from the audience. Let's see if there is any brave person curious to ask anything to you, Arvin.
Hi, Arvin. Do you hear me?
Yeah.
Hi, my name is Sarah, and I have a question regarding the consumer protection that you've spoke about at length, explaining that your incentive is aligned with the consumer actually paying on time. Do you mind speaking to that a little more on how the incentives are indeed aligned? And maybe, if at all possible, tell us which portion of your revenues are actually coming from the late fees from consumers. Thank you.
It's a great question because it makes it very practical in terms of what it is that we do. So a couple things that we look at when it comes to aligning with the consumer incentives. One is that when customers pay on time, we have less working capital requirements. So our business model is predicated on securing working capital to pay a merchant ahead of time before we receive it from the consumer. If the consumer is late, we're essentially paying interest ourselves to a lender on that outstanding amount for a longer duration. So it keeps our costs down to have customers pay on time. And generally, we want customers to pay on time. It's a really strong metric as well to have in the business, to show to that working capital provider that you have strong customers so that you can secure incremental working capital to scale the business further. So there's a really strong relationship there with our working capital providers where they want to see that repayment performance of the consumers as well, to see that they are indeed paying on time and scale. So in order to do that and to drive that behavior, we've got a series of comms that happen as a lead up to the installment payment. We actually do it seamlessly in the background, so the customer doesn't have to do anything manually. It's all automated. And even if they miss the charge, the payment, we don't automatically charge a late payment charge, for example. So we'll send reminders, we'll chase that up, and then we will attempt a few more times before we apply a late payment charge. So I think that that's an important aspect as well. Like I've missed a payment on my card before, and you wake up the next day with $100 late payment charge plus some form of interest that's been associated with the balance amount. It's not really a nice feeling. We also cap the late payment charges as a dollar amount based on the amount to be repaid, and it doesn't compound or add up in any way. So if the late payment charge for this installment was $10, that's it. It's not going to increase $10 the next day or become $10 plus some interest rate attached to it. It's $10. That's a flat position that we've taken on late payment charges. The other way that we manage that, we actually stop customers from making new orders immediately if they have an outstanding repayment. So if they've missed the payment, they can't make a new order. And we actually stop customers, and I'll say dynamically, the decision engine will stop a customer from making a new order if it deems that they've done too many transactions in a short period of time, or they've spent too much in a short period of time. Those types of things come into play. make that decision. I can't give you a split in terms of revenue from late payment versus the rates we charge to merchants, but I can tell you that that's something that we want to diminish to as close to zero as possible if we can over time. It's not a revenue stream that we want to invest in. I think there are other things that we can drive revenue from, and there are other ways that we can work with merchants to solve other pain points that they'd be willing to pay for, rather than try to get this or to make consumers get into a place where they can't pay. It's just not a customer that will have long-term benefit to us as well, right? There's something to be said about what the LTV is on that consumer that pays on time every time.
Yeah, thanks, Sarah, for that
Thank you.
hard question. But Arvin did a great job.
That's a good question.
Yeah, it was good. I think it made me think also of what type of, how do some merchants see you? Is it just a payment option, or do they see you also as a demand generation kind of tool?
That's a pretty cool one, because we started with solving a specific pain point, which was, let's get this conversion, let's get the right customers through, optimize the basket a little bit. Okay, can we get some bundles going for consumers? That was really important to establish a value proposition that merchants were willing to pay for. And as we've grown, we've become the destination to some extent. So we are now the place that consumers will go to discover new merchants, to understand what else is happening with hoolah, subscribe to our newsletter, follow us on Instagram. They are now part of our ecosystem as consumers. They now rely on us to help educate them on the new interesting things that are happening from a merchant landscape. So certainly there are a few merchants that have already told us that we're, a top 2 source of traffic for their website, for example, which is a pretty massive position. These aren't small retailers either. There's some pretty sizable customers that look to us to drive that traffic. And as a discovery opportunity as well for smaller retailers, it's a huge win for them, because we are a chance, an opportunity for customers to discover them and discover their products for the first time. So it's a really good value for the SMEs and the smaller shops out there, because we try to feature everyone on the store directory. Oh, sorry,
Yeah.
that's a question that came through.
Yeah, I guess you're like me. You cannot multitask so well.
No.
My wife could. But okay, let's see.
No,
Hi, Arvin. Do you believe or practice building a portfolio of merchants to attract good users or customers to ensure hoolah's business sustainability?
This is a really interesting question, and ideally, it is a portfolio. So certainly, we want to build a portfolio of merchants. We want to attract good users, and getting the right mix of merchants is really important. But it's probably more relevant to that lifestyle that we talked about. We wanted to be able to help you at your first job. Get the right outfit, look good, be presentable at your first day on the job. Move into your first home. Invest in beauty products as you get a little bit older. I've got the bags under my eyes. I need to invest in that a little bit. As you go through that journey of life, we're here to support the different things that you want and need to get access to. So I think that's an important, or maybe slightly different way of thinking about the portfolio of merchants. The good users and customers, for us, we need to drive that slightly differently from our decision-making standpoint and that decision engine. But of course, working with some great merchants is going to help bring wonderful customer base to the table as well.
I can see the Visa background there, where you talk about life cycle management and life stages of consumers. We have another question from Jaden Lim. Seamless onboarding is essential for a good customer experience, and hoolah's integration with SyncPass in Singapore to retrieve information has allowed for that. For countries without similar information sharing capabilities, what are the challenges you foresee, and how is hoolah looking to mitigate it?
Jaden, this is so top of mind for me. I do look after our product function as well, and one of the things that keeps me up a bit is how do we scale onboarding in markets where we don't have this wonderful solution called SyncPass, where it's like, yep, you're onboarded, thank you, done. We've worked with other providers. I think there is still work to be done there, because you're absolutely right. Getting on board fast and seamlessly without waiting for a manual review or any of these things is really important. Now, we went with an approach of, let's get a service provider that can operate in multiple markets, because we wanted to scale in many places. We're looking to complement that now with asking a slightly different product question, which is, would it be better for us to work with a domestic, call it eKYC, for lack of a better term, a domestic eKYC provider who's faster, more accurate, and more seamless essentially to deal with than, say, somebody who can do it in 20 countries. And we use the more broad provider as kind of the backup solution. So now we are exploring this dualism of a local provider who can provide that more seamless onboarding, coupled with a regional provider who could just operate in every market. In case, say, the local provider went down, we'd still have an option to onboard customers. So this is a really important one and a challenge. I'd actually extend this question a little bit to say onboarding merchants in an expedited manner, in a seamless manner. So KYC, contracting, the entire process for a merchant to do that really well is also really, really important. And it gets missed sometimes because our business model is two-sided, right? But from a consumer lens, definitely a place we're investing in is bringing on more eKYC providers to do this in a more localized and expedited manner in the different countries. Somebody who does really well globally might not actually handle non-Latin characters, which, as you can imagine, we go to Thailand and we go to Korea and other markets, is going to be a challenge.
Yeah, and we often forget that there are merchants as well. They need to be onboarded too. And that process usually, it's kind of old, kind of slow. It requires a lot of paperwork, and it is really manual. So I received another question. I don't think it's public, but I can make it public. How critical it is for hoolah to create its own marketplace versus integrating with all existing e-commerce platforms going forward?
Okay, a black and white answer. We don't want to compete with our merchants. We want to support them. Now, if there were a group of, say, 40, 50 SMEs in a market that didn't operate their own e-commerce website, and we could help them put something together and distribute on their behalf or support that in some way, we could explore that. But I think when it comes to being a direct marketplace, one, it's not a business model that makes a lot of money, if I'm honest with you. Like, running an online marketplace is heavily discount driven these days. And you see the folks like Lazada and Shopee have to go into other business models to make money. Like, Shopee is a loss leader for the SEA group, right? So it's a massive loss leader for the group, but it's important to them, and I can understand a part of the strategy. So as a business model, I'm not sure that it's necessarily a massive investment area, but it's important for us to work with marketplaces and work with those direct brands. And I do see that we do empower some of the brands to go direct to consumer as well, which has become an interesting topic as brands look to take a lot more control of their relationship with consumers and go more direct to consumer. They see us as a differentiating factor as well to be able to do that outside of the marketplaces. So if anything, I think there's a doubling down of supporting the direct brands that we work with. But certainly we do want to work with the marketplaces as well. We wouldn't want to compete with our merchants, though.
Yeah, thanks for that. It's we're getting to the 45 minutes mark, which was the limit we set ourselves for this webinar. Let's see if there are any remaining questions. If not, we can wrap up the session. Arvin, it's been really a pleasure talking to you. I know you have a lot more to share, but for today, I guess that will be it.
Perfect. Thank you so much, Michele, and thank you to the team at Credolab for putting this together.
Yeah, pleasure. Thank you, everybody, for joining. There will be a recording available in the next couple of days in case you want to review the fountain of knowledge that came out of this webinar. All right. Have a good day, everybody.
Take care. Bye-bye.
Bye-bye.